Everyone has to live somewhere, and everyone has to invest their money someplace. So what happens when where you live meets up with where your money is invested? Hello, real estate. Hey, welcome back, everybody, to Big Money Real Estate. I'm Elise Blink. Here's today's daily update. So if you've looked out at any neighborhood that you happen to be driving through, you might be seeing a Berkshire Hathaway sign. Berkshire Hathaway has taken over by leaps and bounds in the real estate industry over the last couple of years. They are buying up affiliates all over the country, and they've formed HSF affiliates. So that operates Berkshire Hathaway HomeServices, which includes a couple of other big brands, including Prudential. Gino is the CEO of HSF Affiliates, and I invited him on the show to talk a little bit about Berkshire Hathaway's runaway growth as a company. It's kind of come out of nowhere, and they have a huge number of agents. And also, they have a first quarter homeowner sentiment survey that showed some interesting trends on how people are defining the concept of home value. The big headline for the survey seems to be the price and location are no longer the only motivating factors when choosing a home to buy. And there's a new sense that homeowners and home buyers are looking at their homes as longer-term investments that will shape and be shaped by how they live. That's kind of interesting. So I wanted to welcome to the show Gino, CEO of HSF Affiliates, operators of Berkshire Hathaway HomeServices. Gino, welcome to Big Money Real Estate.
Thanks. Great to be here. Thank you for having me on.
Sure. So just when we were off camera, you were starting to tell me a little bit about how you got involved with Berkshire Hathaway. Tell me about your background and then how you got pulled in as the CEO.
Okay, well, longtime real estate guy, had a couple of independent companies that I've actually sold, done it twice now. Had a company called Contempo Realty, which in 1997 sold to Realogy, and was with Realogy for 5 years because I had a 5-year non-compete. When that was up, I founded Intero Real Estate Services right here in Silicon Valley. And just last year, I was offered the position of CEO of HSF Affiliates, which operates the brands Berkshire Hathaway HomeServices, Prudential, and Real Living.
So tell me how many brokers and agents you now have working under this brand.
Okay, under the Berkshire Hathaway
Well, I know it's several
brands.
It's Prudential
as
well.
Several brands. But maybe we'll start with the Berkshire Hathaway HomeServices brand because the last year was a year of conversion. We were converting many of the Prudential real estate companies to Berkshire Hathaway HomeServices, and as of like today, we have over 37,000 real estate agents and almost 1,200 offices, all converted. That was last year. 2015 and going forward now is transition from conversion to growth.
All right. So did you say 37,000 agents?
Mm-hmm.
And
yes.
Are those congregated in major metropolitan areas, or have you spread into more of the second-tier cities? Where are you?
We are all over. We're in 47 of the states right now, but we're just about our footprint is in the metropolitan areas, but also all across the country. Where
does the impetus come from Warren Buffett and Berkshire Hathaway, this idea that you're going to take on Realogy and the established big brands? Why did you and why does he feel that there's room for this? And clearly there is, because you've built yet another brand, and I really thought that once Better Homes and Gardens Real Estate launched, that was the last big brand we were going to see. But this brand has really come in and taken, I think, the industry by storm.
Yeah, I think it's just normal to our industry. There'll be more brands after this brand that comes in, and it's just the nature of real estate. The nice thing about starting a brand from scratch is you can start from scratch, much the way I did with Intero Real Estate Services, starting from scratch.
So when you're actually thinking about moving ahead and growth plans over this year and next year, what are some of the things that you're looking to do? Are you looking to add on those last 3 states? Are you looking to double the number of brokers? I mean, you've got, out of 37,000, there are roughly 1 million, 1.2 million, depending on who you talk to, agents out there. So it's a small percentage of what is potentially and what is an enormous pie. What's the strategy for growth?
Well, here's a strategy. My my assignment basically is to grow the network, and I like to call that the war. So the war is to grow the network, and then the four battles that I've chosen to fight to win the war is per person productivity, which is kind of interesting because typically a franchisor never really pushes down to the per person productivity of an agent. Okay. The next thing I have is average sales price. With the Berkshire Hathaway HomeServices name and brand, we're a natural fit to the high end. The other piece where I can, being a past broker and operator, I can help the existing companies grow organically through recruiting agents, also through mergers and acquisitions. And then the fourth piece, or the fourth battle to win the war, would be selling franchises, new affiliates in areas that we aren't in. We'll be extra careful on who we choose to award a franchise to, but those are the four things.
And are you hoping for what kind of growth over the next 2-3 years?
I'm hoping to grow by 10% each year.
Mm-hmm. Well, it's going to add up, that's for sure. Well, let's talk a little. I'm sorry, go ahead.
I'm sorry. To that point, if we can organically grow the existing companies, okay, I'd love, and it's a very, very hairy, audacious goal, to steal a line from Jim Collins. I'd love to help every one of our existing affiliates double the size of their company within the next 3 years.
And that would actually be enormously profitable for you up at the very top.
Yes. I mean, you can think of when you have probably, let's just pretend, use the number 50,000 agents. If you increase per person productivity by one transaction per agent, okay, that's a huge jump there. And my goal is to increase per person productivity by one transaction per quarter.
Wow. That will be really interesting to see, and we'll definitely track it for you. Not that you're not tracking, but for those of us playing at home. Let's turn and talk about your survey a little bit. You did a survey of something like almost 2,100 homeowners and 500 prospective home buyers in February. You covered 7 themes: the smart term long investment, the fits, needs now and in the future, ease of purchase decision, the makes me feel proud, location and community, benefit the entire family, opportunity create. And you kind of came up with some interesting themes about how millennials and other people who are out there today take a look and value home buyers. So what did you find in this survey?
It wasn't too tremendously surprising to me, being, an agent since 1985 and an operator up until last year. But here's what we found. Millennials are very much interested in ease of purchase. How can they get into the home? And it was also very, very important to a millennial to be able to say that they owned a home. Those were two things that jumped out to me, where the Gen Xers and the boomers, of which I'm a boomer, they were more looking at home as an investment. Okay, you're the biggest investment that you would make, and the importance of it being as an investment.
So this is more, you think, for millennials, this is really about a home is a home. Is that not thinking about it, though, in the right way? You pour so much money into this. How do you make a smart decision about whether owning a home is the right move or renting a home is a better move if you're not actually looking at the metrics and the numbers? And if we know anything about millennials, we know that they definitely understand metrics, or at least about social media metrics.
Yeah, and I think a millennial will understand that their parents, who are the baby boomers and the Gen Xers, certainly have built up a great deal of wealth by owning their home, and so that's a piece, and not to mention we got other factors going for us right now with pretty much appreciation throughout the country, much higher in certain areas than other areas, but also these incredibly low interest rates that we have that make home buying a great deal for anybody buying opposed to renting.
So if millennials are valuing the now over the future, what does now look like to them? Is now 2 or 3 years? Is now 6 months? Has that definition of sort of now taken over, and people just aren't even thinking about the future?
Yeah, well, for our survey, the now is anybody thinking to purchase in the next 6 months. Okay, so that was our very current thing. I've talked to many millennials, and they also still understand the investment of home ownership. Here's an interesting thing: when the baby boomers were the same age as the millennials, 18 to 35, okay, You know what we thought of, me as a baby boomer? The ease of purchase. We thought of the exact same things. It's almost more of an age thing than it is different demographics of being a millennial, being a Gen Xer, or being a baby boomer. Certainly, these millennials, they're digital natives. Okay, so they've got all sorts of access to stuff. But that would be my thought.
It's sort of interesting. We all thought about ease of purchase, but it wasn't very easy for us. It's a whole lot easier today to find out all kinds of information about homes and the history of them, and the web has certainly changed how that is. But one of the other things that I thought was interesting about your survey is it talked about how 88% of current homeowners say it's important to update or renovate their home over time. 75% have done renovations to their current homes. And then, well, of course, because the first thing that happens when you typically move into a house is you spend an average of $10,000 to $15,000 to update, renovate, put in window treatments, new carpet, polish your wood floors, new kitchen cabinets. But is there something else beyond that that you found in this survey?
That's an interesting point. Yeah, here's what we did find. They always talk about, kitchen and bathrooms, and probably bathrooms ahead of kitchens, because kitchens are so personal, and people like to have a kitchen the certain way. But here's what we found in the survey, that over 60% were all talking green. Green upgrades, appliances that are green, solar. Dual pane windows. Green happened to be a big deal, which was actually great to see.
It is great to see. Over the last 7 years, green has really gone from one of those things that all retailers and manufacturers said, is that actually a real thing or just sort of a longer term thing? And I did some consulting with companies, including HGTV and then some of the actual home products manufacturers. So, Gino, it seems like it has been, 25 years of my whole career that I've been hearing about how we're going to get a connected home, a greener home, and all the rest. I'm wondering if your agents are actually now going into homes and seeing the vision of Nest, which is to have that kind of connected Google hardware and software that actually goes together to make the home greener, more eco-friendly, and the rest.
Let me just speak a couple things about green. In 2006, I was actually the eco broker of the year for green. Okay, and I remember my daughter was about 16, and I purchased a little hybrid car, and I actually got the California license plate eco broker. But I can remember all my managers at Intero thought I had lost it. Like, what is he doing on this green thing? Okay, and then over time it became more and more clear. So to that point, it is. I was just meeting with one of the agents that's in a book club that I'm in, and he was telling me a story about green that he recently in Silicon Valley, where it's prices are high. We've got Google, we've got Tesla, you name it, we have them here in Silicon Valley. He sold a lot to a customer for $3.5 million in Los Altos Hills. And the big thing about this customer was he wanted to be totally off the grid. So he wants to be able to be completely off the grid. So it is out there, and it will be more and more and more.
So interesting. Gino Blafari, sorry, let me take that again. Thanks, Gino. Gino Blafari is the CEO of HSF Affiliates in Irvine, and they own the brands Berkshire Hathaway and Prudential. And what was the third?
Real Living.
And Real Living. Wow. Thank you so much for being with us. This has just been a great interview.
Great. It's great to be with you, too.
And thank you for watching this episode of Big Money Real Estate. As always, you can send me your real estate investing questions on Twitter and Facebook. Be sure to share this video all around. This is a really terrific interview. And don't forget to check out my brand new series, The Intentional Investor, How to Be Wildly Successful in Real Estate. And you can find that on the WIT Nation store or at thinklinkstore.com. See you next time. I'm Elise Lang.